Ooh, imagine if you could just plop down on the couch, grab the remote, turn on the TV, and make money from investing. Can that really happen? It can, it sure can, and I'm gonna show you how it can right now. Welcome to Wealth Hacker TV. I'm your host, Jeff Rose, and this is the channel dedicated to teaching you new ways to grow wealth that is not taught to you in school or by your parents. And this is a special edition because this is a part of the Grow Your Dough Challenge. If you don't know what that is, you need to check out this video where I share what I'm doing here. But basically in a nutshell is I've opened up several different investing accounts between Lending Club and Fundrise and different investment apps. And basically I have put $1,000 in each of these accounts. And at the end of the year, we are going to see which one grows the most, which one grows their dough the most. And I have other YouTubers that are taking part in this year-long challenge. So if you want to track along with everybody else over the next year, be sure to subscribe and hit that notification bell so that you know when the next Grow Your Dough Challenge video is hitting your inbox. All right. One of the investment platforms that I wanted to use as part of this Grow Your Dough Challenge is Betterment. Now, why Betterment? Because I get a ton of people that want to start investing. They don't know what to do. They don't know how to start. They don't know where to invest. They don't know what a mutual fund is or an ETF is. They've never bought a stock before. It goes on and on and on. So what Betterment brings to the table is that they are an investment platform that you don't have to choose the investments. If you've never bought a stock before, it's okay. If you've never bought a mutual fund before, it's okay. If you don't know what an ETF is, it's okay. And the other excuse that I hear is, Jeff, I don't have any money. I don't have a lot of money to invest. Guess what? With Betterment, it's okay. With Betterment, you don't need $500 to get started. You don't need $1,000. You don't need $10,000. You can get started with a very small amount. If you're going to invest $10, bring it. Betterment wants you to start investing. And if you don't think that's awesome, check this out. Their fees are super, super low compared to a lot of those big Wall Street firms that they want you to have at least $100,000 and they're gonna charge you $2 to $3 grand just to work with them. With Betterment, you're gonna pay low fees and you don't have to have a huge minimum to get started. So if you're watching this and you're saying, oh yeah, yes, yeah, great, awesome, I love this. Wait, who's Betterment? I get it, right? You don't want to give money to some operation that's here today and gone tomorrow. Betterment started in 2008. Conveniently enough, is the exact same year that I started my blog. We shared that year. That's very special. So Betterment has been around for just over 11 years. Now, a lot of other investment firms have been around for a lot longer, obviously, but here's some cool stats about Betterment. They currently have over 14 billion, that's with a big capital B, 14 billion assets under management. You want to compare that to another investment startup like Wealthfront, who has around 10 million. I mean, they're 4 billion more. Now, they're not nearly as big as Fidelity or Vanguard, but still, it's pretty impressive the fact that this newer investment platform that started just over 11 years ago has over 14 billion assets under management. The way that Betterment has approached the financial services industry has just been stellar. It's been top notch. Not only do they offer an amazing product for consumers, but they've also targeted financial advisors, being able to offer them an investment platform that they could offer their clients. So many of you may not know this as a financial planner. You can build your own portfolios or you can leverage the technology, the resources of other platforms. And Betterment made a platform that was so easy to use. And it was just stupid easy to where compared to a lot of the other dinosaurs out there, you can definitely tell they get technology, they get fintech, and they get the change of the times. Okay, in this video, I want to take you behind the scenes. I want to show you what it looks like to open an account with Betterment so you can experience what that feels like. So here I am adding my $1,000. I am choosing my investment portfolio so we can see what that looks like. At the end of this, I'm gonna log in and show you what the current returns are. So I just opened this account just over a month ago. So we don't have a lot of time here, but you can still see that in a short amount of time, we've been able to make some returns. So that way you can see how to get started with Betterment, what it looks like to choose investments. You'll see how easy it is, and you'll see how you can make money. All right, so I'm at betterment.com right now. I am setting up the account. This account actually is set up in my wife's name. I'll explain that later on. So you can sign up. They have different types of accounts. You can do an investing account, like a joint account. You can do traditional IRAs, Roth IRAs, SEP IRAs. So they offer all those types as well. With the Roth IRA, I think there is a minimum on that. With the regular investment accounts, there is 0. All right, so I'm going to go ahead and pause this real quick. So with Betterment, they use ETFs, exchange traded funds. They don't do stocks, they don't do mutual funds, they do ETFs. Now, if you don't know what an ETF is, like, that's okay. ETFs are basically different indexes. So we're tracking like the US stock market or the real estate index or international index, etc. The best part, as I mentioned at the beginning of this video, is that you don't need to know what an ETF is. You don't need to choose the ETF. So Betterment has created these portfolios, and they will then build that portfolio based on what your goal is. So if you have a retirement goal that is 20, 30 years from now, you're going to be more aggressive. You're gonna have more stocks and bonds. If you have a goal of buying a new house, like in the next 2 or 3 years, or maybe it's a retirement goal, a vacation goal. So that one a little bit more shorter term. So you're gonna have a lot more bonds and stocks, a little bit more conservative. So based on the retirement goal that I completed when I was doing this, Betterment gave me a 90-10, 90% stock, 10% bond portfolio. In that portfolio is a bunch of different ETFs, which I'll share with you here in a second, or as you'll soon see here on the screen share. So let's go ahead and continue. So here's the recommended portfolio strategy that they did. Then you can look at other strategies. So they have the Betterment portfolio is the one that I chose, but as you can see, they've got 5 different ones that you can choose. And even within those different portfolio strategies, you can go more aggressive, more conservative. So now let's look at the holdings, and I'll do this again later on in this video. I'm actually gonna pause it real quick. So here you have the very top one there as the International Emerging Market Bond ETF has 1.5% of the total portfolio. The US, I'm skipping out to the third one now, the US total stock market ETF there has 31%. So it has a basically the largest weight out of any ETF. I'm going to scroll down a little bit more. If you look at the international developed market stock holding there, that's 23%. So that just gives you a rough idea of the different types of ETFs. So these are all ETFs, and they do this for you. So if one of them grows and you end up having more stocks than bonds, then they'll rebalance those for you. That's why I love Betterment. I mean, they truly, truly make it. It's like investing on cruise control, right? You don't have to do anything. If you have one of those cruise controls that will slow down if there's a car in front of you, or needs to speed up if there's more space, like that is what Betterment does for you. So that is it's stupid easy. All right, so we're looking at the portfolio. So that's the portfolio that I end up selecting, for this Grow Your Dough challenge. They then allow you to just kind of compare your risk level. Right now it shows me as having moderate risk profile, and you can change that. You can kind of get a sense of what does it look like if you are more aggressive, or what does it look like if you're less aggressive, more conservative over the next however many years. So if it shows if I go to 94% stocks, that will increase my return by a certain percentage. If I go down to 85% stock, that will decrease my return for a certain percentage. So it just kind of gives you a rough idea of like, okay, well, how much return am I hoping for, but with that, like, how much risk am I going to have to take? So it just kind of gives a checklist of all the different things that you are getting, with Betterment. You got the goal analysis, the automated rebalancing. They do tax loss harvesting, which is a little bit more complex, only really applies if you're doing taxable accounts. And if you don't have a big chunk of money, it doesn't really matter all that well. So you select a portfolio, like, all right, it's saving my portfolio, and then it shows like, all right, how much are you going to actually invest? For this Grow Your Dough challenge, I'm doing $1,000, so I'm showing that here. And then if you want to do like a monthly contribution, it'll do that for you. So just as like a one-time, looks like it readjusted, but So just showing if I did $1,000, like a one-time deposit, $1, looks like over an average market performance is like, it was $6,000, $6,300 it would make over a certain period of time based off the return and based off that time horizon. So you can see here, I'm setting up an individual taxable account. I'm doing a one-time deposit. You can do automatic deposits, all that fun stuff. They make it super easy. Just want to show you like how intuitive, like their platform is just so easy. Identifying where did the money come from, and yeah, I got extra cash flow. I got some cash flow. So here it is. So here's like where the platform looks like. You can change your goals, which then will change your holdings or what your portfolio looks like. Looking once again at the holdings. I want to pause this real quick. So I'm not really talking about the Betterment fees yet. If you are doing we'll call it the entry level package where you don't want to talk to a professional financial planner, they're going to charge you 0.25%, 0.25% for their fee. So that's Betterment's fee. In these ETFs, if you look in the middle there, you can see what the percentage is on the ETF. So the ETFs, like any investment, is going to have an internal cost. But ETFs compared to mutual funds and other investment platforms other investments out there, they're one of the lowest that you're going to find. And just looking at the top one there, you're looking at 0.04%, what that fee is. Anytime you're dealing with US investing ETFs, like the fees are always going to be a lot lower in comparison to any sort of international ETF. Is going to be a little bit more expensive, but even still, that ETF, the International Emerging Market Bonds ETF, is 0.4%. So still very, very low. The average fee percentage of the portfolio based on the weights of the individual holdings is 0.07%. 0.07% is what you're paying for those this ETF portfolio. So if you got Betterment's fee of 0.25% and then the ETF fee of 0.07%, we're talking all in 0.32% what you are paying per year. And if you are starting off with $100, or if you're starting off with $1,000, like that's not a lot of money. We're talking like $32 a year to get invested and have a professionally managed portfolio for you. I mean, that ain't too bad, right? That ain't too bad. So that's just a look of what Betterment looks like, just setting up the account, getting the portfolio holdings, choosing the strategy. If you want to read more about the portfolios, you can. They just offer a ton of information. All right, so now I'm going to log into the account so you can see what the returns have been with Betterment in the short amount of time that I've been in there. Once again, I've only had the money in there. I don't think it's even been a month, maybe close to a month. So let's take a look. Okay, logging into the account, you can see the total balance is $1,029.27. So in the short amount of time, $29.27 is what I've made. The deposit was made, did not get this in until January 28th. So January 28th is when this money went in. The time of this recording, it has been almost not even 20 days. So not bad on the return. So when I mentioned at the beginning of this video, like, can you actually invest into the stock market and make money while you sleep? I mean, this is just showing with Betterment that you can. Like, you can make money without doing anything, right? Like Betterment, they manage the portfolio, they made the trades, they'll rebalance. They do all of that fun stuff, and this is just how it looks. Now, we already looked at the holdings, but we'll look at it one more time. So here's all the different ETFs that you own. Stupid easy. All right, let me wrap this video up so we can get you to start investing and you can make money while you sleep. All right, hopefully you can see how easy it is to open an account with Betterment and get started investing. For me, setting up the entire account, what took the longest was getting my bank to sync with Betterment. And I promise you that is not on Betterment's end, that is my bank, because I always have issues with my bank trying to sync with other platforms. Betterment gets it. Like, they are so far ahead of the curve than a lot of investment platforms out there, a lot of banks that, oh my goodness, let's just say I I like them. I like them. They make things so simple, but most importantly, they make it simple so that you can start investing and make money. There are no more excuses. Now, the return that you saw that I'm sharing with you, like that is because the market has acted favorably in that time frame. So I don't want you to think that if you open an account with $1,000 in a month, you're going to have $30, the next month $30, the next month $30, so on and so forth. That's not how the market works. So it is potentially you could open an account and you could lose money in that first month, because that's how the stock market works. It's about investing for the long term, getting invested, compounding interest, doing its thing so that you can compound your wealth and invest for the future. As I mentioned at the beginning of this video, Betterment is just one of the investment platforms that I am using for this Grow Your Dough challenge. If you want to check out the other platforms that I've opened up, be sure to subscribe to this playlist so that you can see the investment platforms that are growing your dough. If you've never invested, or if you're curious how these other investment platforms work, you'll be able to see behind the scenes how those work and see real returns. Not your returns, they're my returns because it's my money. All right, so I hope you enjoyed this. Until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Let's go grow your dough. Peace.